Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, September 12th, 2017. Well, I wanted to talk about Apple today because Apple's really the major play today in terms of upside, downside, all around side. And really what we've seen today is the iPhone 8 and the watch were updated. Definitely much, much better. But I think it's important to recognize that the price action is not good here. So let me go to the intraday. Let's start. This is the daily on Apple, but let's go to the intraday 10-minute. And what you could see is you gapped up on Apple today. You then reversed. This is before it was unveiled. It was unveiled at 1 p.m. Eastern time. Then into the unveiling, and when it was unveiled, you got this beautiful pop. And then look at how investors just sold into that. And the stock cratered. Now it's getting a little bit of a bounce, but still down about $1 and change right now. The reason why I say that's not good price action is for a few reasons. Number one, they actually made major improvements to the watch. The phone's pretty impressive, and we're not seeing investors buy it up significantly. In fact, it's negative on the day. That's not a good sign. That means there's more net sellers than buyers. In addition, one of the bigger things that I'm taking note of here is if this was going to be the game changer today and this announcement was going to be spectacular, you should have taken out the all-time highs at 165. You did not. All right. The fact that they unveiled this major new phone and watch and pumped up investors with some cool new gadgets and so forth, and it could not take out the all-time highs of 165, to me that says there's downside here and this is topped. All right. And again, what I think is interesting about that is noting that Apple is the biggest component of the S&P as well as the Nasdaq 100, big component of the Dow Jones Industrial Average as well, although not the biggest. But here you have a scenario where if this is topping out, you have to ask yourself, as goes Apple, does the market go as well? All right, and we've seen the market hitting new all-time highs recently. Well, guess what? Apple just a week ago was hitting all-time highs. If that's going to change, does it then change the scenario of where the markets go overall? And I'm speculating on that part. I don't know for sure, but it is something that I think is worth noting. Okay, so bottom line is, folks, the keys here: Apple unveils its new phone, its watch. The stock initially spikes up, then reverses. Now it's down about 85 cents here. Was down as much as $2, so you are seeing some bottom fishing going on there. But in my personal opinion, you have a potential head and shoulders forming here. You can see it right here: shoulder, head, and then maybe this is the beginning of a little bit of a shoulder here. The neckline would be right here, and if that breaks, you're going to go down to gap fill right here. Would be your downside target at $150. That's a $10 drop on Apple from current levels, actually just over 10. That would be pretty impressive if we could see that type of sell-off. We also have the 200 moving average just a little bit below, another $10 below that. But those are my two levels. I would say 150 then 140 are your two downside levels. I don't necessarily know if the 140 will come by the end of the year, but I do think the 150 does come very successfully. Today, the Qs have been under some pressure today. If we bring up the QQQ chart, right around the all-time highs, but we are seeing it barely positive, just up 9 cents. It was negative earlier when Apple was down about $2, but has fought back as Apple has bounced up as well. But there's some really interesting things going on here. Just a couple other charts that I'm watching here, guys. MasterCard putting in a doji today. That's topping signal after an extended move. I think it's important to take note here. One of the reasons why I'm super bearish and actually do have a short position in MasterCard is because you have a PE on this. This is just a credit card stock, right? I mean, this is a credit card processor, Visa. I mean, it's MasterCard. You have Visa out there, you have Amex, and so forth. The PE on MasterCard right now is 35. All right, 35. All right, that's like a tech stock. I mean, if you go to like a stock like Qualcomm's like an 18 PE. And it's Qualcomm. I mean, they have chips. They could be the next revolution for AI or VR or whatever. I mean, those are the types of things that they have the potential to do. What's the potential for MasterCard? Answer me that. I mean, what? They're going to charge a few more people? A few more people are going to get credit cards that are from MasterCard? You know what I'm saying? It's just a little bit on the insane line. And while I can't guarantee you'll see MasterCard fall right away and it'll be like a no-brainer just down, I will tell you this, that you come into any sort of bear market and valuations on stocks like these will come back into suit. And in a bull market, the best case scenario, in my opinion, should be like an 18 to 20 PE. It's at 35. In a bear market, MasterCard could be trading as low as 10 to 12. I mean, so again, 10 to 12 is almost a third. That's a third of what the price is right now. I mean, you could see a third of two-thirds of the market cap of MasterCard wiped out if we go into a bearish market situation. There's a lot of downside here, folks. There is a lot. I mean, if you want, to take this as, my call out there, this is my big call here. In the next 6 months, I do think the market's run into some major trouble, and I think MasterCard will see, honestly, I wouldn't be surprised to see $100 on this stock within the next 6 months. At some point, reality comes back in. At some point, valuations start meaning something again. At some point, MasterCard falls to 100. All right, guys, come join us at InTheMoneyStocks.com. I gave out new trades today. We took a 50% profit on an options trade on McDonald's. 50% profit on an options trade. That was in the options alerts. If you're into options, join the options alerts. If you're into research center swing trades, we took 3 yesterday from the research center, 3 profits yesterday. I put out a new trade today that's looking excellent, and we'll want you to come take that free trial right there. There's a free trial to the research center at inthemoneystocks.com. Rock and roll with that. There's no free trial to the options alerts because it's just so spectacular that, again, it's the big money's made in options. You want to make 50%. There it is. You just pay. You have to pay for it, frankly. But for the research center, we do offer a 7-day free trial. Come join us. Take the 7-day free trial. Learn to profit with the best in the world. Take care.